My guest today says Bitcoin is the safe bet after moving his firm's cash to crypto and a pretty big chunk of it, 425 million of it. Please welcome MicroStrategy's Michael Saylor to the show. Welcome. Nice to meet you, Michael.
Great to be here.
So you definitely made headlines this past week with a big move into the cryptocurrency world here, 425 million. Do you sleep well at night with this move, Michael?
Much better after the move than before the move.
All right. Well, let's talk about that because I like one quote where you said you were sitting on what, a $500 million melting ice cube. Why do you see it like that?
Well, for the last decade, I didn't pay much attention to macroeconomics. And I just thought of it as we had a conservative treasury policy and we had $500 million or more, and we're going to generate 2 or 3% interest on it, and we'll use it when we need it. But of course, over the past year or so, that interest rate went from 2 to 0. And then everybody woke up to the world of macroeconomics this year because we had the largest intervention of the Federal Reserve maybe in the history of the country. Right. And that drew me into a deep dive, and I started studying the expansion of the monetary supply. And I realized that for the past decade, the monetary supply has been expanding by 7%. And the actual inflation rate on assets is not 2%. The inflation rate on assets is 7 to 8% if you were holding equity, and the inflation rate on a bond is 22% if you were holding the long bond. And now I realize that the estimate for the next few years has got to be 10% or more. And so when you start thinking about your cost of capital being 10% and you're holding 500 million in cash that's yielding 0, I realize my real yield is negative 10% at least for the next 3 years. And so I imagined $150 million getting burned or melted away, and it made me very anxiety-ridden.
Wow. So Michael, when we're talking or when people think about where to diversify and alternative asset classes, the two classes that come to mind and are most popular, of course, Bitcoin and gold. Why not gold, Michael?
I considered gold, and then I started studying the two, and then I realized that gold miners are going to produce about 2% more gold every year. And then I realized that there's a possibility over the next 100 years that more than 2% of gold will be increased. But let's just say in the best of the world, for 100 years, we produce 2% more gold. That means $100 million will be debased down to $12.5 million in 100 years. But on the other hand, Bitcoin is exponentially going to infinity stock to flow. There's never going to be more than 21 million Bitcoin. So you're really talking about at most diluting $100 million of Bitcoin by 10 million over the 100 years. And given the fact that Bitcoin is an infinitely hard asset, whereas gold can be produced by human beings given enough incentive, I realized that over the long term, Bitcoin is the harder asset than gold.
Interesting. See, so when I speak to gold bugs, and I speak to many big gold bugs, their main argument right now is when the money starts leaving the bond market, which it already has, it will naturally flow into gold, and that's what will drive gold to $5,000, $10,000, $20,000 an ounce. What are your thoughts on that reasoning?
I don't think it's a very intellectually deep argument. For example, I do believe that money will flow from the market to something different. And by the way, gold would be my number 2 choice. But if you double the price of gold, you're going to double the incentive of miners to produce gold. And if gold goes up by a factor of 10, human beings have a way of putting capital into mining and ingenuity, and they'll invent better ways to mine it. And at some point, they'll melt down their jewelry or they'll find other gold. On the other hand, if Bitcoin goes up by a factor of 10, no amount of investment in Bitcoin mining can produce more Bitcoin. It's extremely hard. So the history of commodities, and gold is simply the most pristine of all commodities. The history of commodities is that when the price goes up, human ingenuity and human capital produces more. And we have in front of our face the best example, which is fracking. The country had an oil capacity limit, and we thought it was a problem. And when oil prices got to $100 a barrel, we invented fracking. The amount of oil produced in the United States went from 5 million barrels a day to 10 million barrels a day in 5 years. there's no oil crisis in America anymore. And so really anything that can be produced by people at a high enough price will be produced.
But if we look at how many new gold mines, yes, they are still mining gold, but I mean, a really big gold discovery, it's been years, Michael.
Given enough money and given enough wherewithal, no one's going to melt down their Bitcoin jewelry to sell at a certain price, right? And the key point here is if I put $100 billion into gold mining, I will produce more gold. How much more we can debate. If I put $100 billion into Bitcoin mining, I will produce no more Bitcoin. I will just produce more security, right? It's impossible. Even if you put $1 trillion into Bitcoin mining, it's impossible to produce more than 21 million Bitcoin. All you're doing is making the network better and safer. But at $1 trillion of gold mining, you will produce more gold. We're just going to debate about how much gold you're going to produce.
Do you think we'll see a shift? Because we see central banks buying gold, right? And that was a signal, I would say, at the start of this year and last year when there was record buying from central banks. Could we see that happening with Bitcoin?
You know, I think that Bitcoin is digital gold, and that means it's faster. I can move it 1,000 places in a couple of seconds. It's stronger. I can pledge $100 million of it for 3 hours in Japan on a Saturday afternoon, right? It's smarter. I can write a computer program that'll slice it in a million pieces and do complicated things with it. It's only going to get better every year forever because it's software. And what that means is people that are attracted to Apple and Amazon and Google and Facebook, because they're smarter, faster, stronger networks, they're going to be attracted to Bitcoin. Logically, that means, by the way, central banks weren't buying Apple, Amazon, Facebook, and Google initially. It'll first be technology investors, then it will be super high net worth individuals, it'll be private companies, it'll be public companies, it'll be the institutions that bought Apple stock. Eventually, Warren Buffett bought Apple stock, but he bought it 10 years after I bought it, right? So eventually then, and then you read about central banks today buying the NASDAQ today, right? But 5 years ago, central banks wouldn't have bought NASDAQ stock. So maybe they'll get there, but it's going to be a natural adoption cycle with waves of other investors taking the asset position first.
You've also said, Michael, that the Bitcoin reserve holdings could be liquidated at any time, even on any given Saturday, for example.
Yeah, that's been misinterpreted.
Yeah.
What I mean is that Bitcoin is the best security and the most liquid security invented in the history of the world.
Okay.
There's never been a security, you can't convert dollars into yen on Saturday afternoon. You
Gotcha.
can't sell gold on Saturday afternoon. You can't sell Apple, Amazon, Facebook, or government debt on Saturday afternoon. With Bitcoin, you can get a bid on it in any currency, any hour of the day, 365 days a year, which means you can market to market at all times. We've never, in the history of the world, had a liquid security that you could mark to market everywhere on earth, every minute of the day, no holidays. And that's what makes it an extraordinarily pristine asset.
Michael, I know that folks like, and pundits like Max Kaiser and Raoul Pal very much share your vision and your vision of Bitcoin. And they have very bullish calls on Bitcoin. I mean, Raoul Pal, the last one I saw was, it could go to 1 million. What kind of forecast do you hold?
I believe that the price of Bitcoin and the value of Bitcoin is going to go up as more people adopt it as their treasury reserve asset, as the technical utility increases, as the productivity of all the people that adopt it goes up, they'll sweep their cash flows into it. And then as the inflation rates of all the fiat currencies it trades in increases, and I'm talking about asset inflation rates, like the 10% a year. I'm not talking about CPI inflation rates. Those four drivers are going to drive it up. At what rate? I'm not a trader. I don't really respect traders, to tell you the truth. Like, I'm not in the market to buy it this week, sell it next week, and buy it back the next week. I'm more in the Warren Buffett school of thought, which is you buy it because you expect to hold it forever. and it will go up over time. I just don't know at what rate and to what level, except obviously, I believe it's extraordinarily valuable.
Now you hold 73% of your company's voting shares, but I still want to know, when you showed up on whatever day that was with your new strategy here, what was the reaction like?
I think, are you speaking about
the company?
Okay, our employees?
Yes.
They're very excited because they think it's a very progressive move. People are, our company's full of technology lovers. And Bitcoin is digital gold. It's the dematerialization of gold, in the same way that Apple dematerialized your camera and Facebook dematerialized your photos and Google dematerialized your library. So it's really cool to be on the edge of the virtual wave where you're doing something that's going to be 1,000,000 times better than what came before it.
And Michael, finally, as the CEO of a huge company, moving into Bitcoin, obviously there's a fear of the value of the US dollar, of what will happen to the currency, what will happen to our economy. How do you see things?
I think that inflation is a vector. And that means that there are some assets like YouTube views and manufacturable goods that are not, that are very abundant, and they're not going to inflate very fast. I think that there are going to be scarcer assets that will inflate faster. And I think the pure financial instruments and assets will inflate even faster than that. So as we produce more money, I think we'll have a range of inflation rates from 0% to 25%.
Wow.
I think that, for example, bonds have been inflating at 20% a year for a decade. You could have spent $1 million on a bond in 2010 that paid you $50,000 a year in interest. This year, you would pay $10 million for the same bond. It's a 22% inflation rate. I think that we're going to see those sort of products continue to inflate. I think that eventually there'll be consequences and there'll be changes in behavior. As for how that balances out, it's very complicated. It's unclear, except for the fact you don't want to be holding assets with a negative real yield.
So is inflation, as Alan Greenspan said recently, the greatest threat to the economy right now?
I think so.
All right, Michael Saylor, thank you so much for joining us today.
Thanks, Danielle.
And thank you for watching this latest edition of Stansberry Research. We will have much more for you. In the meantime, you can follow us on all our social media platforms. We're on Twitter, Facebook, Instagram, and LinkedIn. We'll see you tomorrow. I'm Daniela Cambone.